Here we go again. Jeremy Powell sent a very strict message to the market and many didn't really like it. So whoever think that the loss was the really loss of the rate hikes might thinking on the wrong path. So Jeremy Powell strictly stated at the Jackson Hole Symposium that the inflation target is still 2% and they do not look away from this goal. Therefore, there is a very high chance of raising rates again. He is welcoming that the CPI moved lower from its peak, however noted that this is very far from being close to the goal. He has also emphasized that other components of inflation, including PCE, core CPI, PPI, are still on a very uncomfortable level while admitting that basic essentials are on a very high price. He obviously informed us that further tightening is needed and is going to happen in the near future. He also signaled that the economy hasn't slowed down enough to stabilize prices for further decline in inflation. Meanwhile, he interprets the current wage growth and its possible further strengthening as a threat of declining inflation, therefore the labor sector should weaken. As of my economic analysis, my expectations are unchanged obviously. I still see a huge chance for a further rate hike and close to the end of the year, a start of a long phase of rate hike pause. This period could indeed extend to the next year unless something tragic happens that forces the Fed to cut the rates, such as war. Furthermore, I expect the unemployment rate to increase in the future. But today we're going to take a look what's going to happen next week in the macroeconomic field, therefore how Powell's message could affect the market, and also we're going to talk a little bit about the Nvidia backfire. But first of all, let's just not forget that Jeremy Powell see the 2% target as the main target, and I don't think he's going to back off unless something really tragic happens. But also don't forget that at the last rate hike meeting, he emphasized that the Fed is going to make the decision whether it should raise the rate again at the September meeting or pause and raise again on the November meeting, according to the upcoming 2 bunch of inflation data, which we got one already and the next one is about to come. Monday will be kind of clear from these informations, but the European Union is also going to struggle a little bit. Because M3 money supply gonna come and it's most probably not going to improve. But the private loans data also coming and I don't think it's going to show us any kind of positive picture. As you can see, the private loans is falling since the middle of 2022 and my expectation is another fall from 1.7% to 1.4%. And this obviously going to affect the Eurozone and the Euro currency as well. So whoever trading on the Forex market should be very alarmed about these data. Then we're going to Tuesday, which is a little bit more from the United States. First of all, we're going to get the S&P CS Composite 20 HPI, and there is a huge complaint about the house prices right now, so I believe the market will open in a very exciting way. Then US CB Consumer Confidence and US JOLTS job openings, both of them very powerful data, and the already nervous market could give us a very surprising answer. But the big gun is going to start on Wednesday. The Australian CPI is obviously very important. But what's more important is the German prelim CPI, which is an advanced CPI data from the European Union. And as we all know, after the very tragic PMI reports from Germany, if this CPI starts to increase again, could have a devastating effect on the euro. But at the afternoon, and please don't forget that all the time is in Central European time, US ADP non-farm employment change, prelim GDP, which is a quarterly data, and prelim GDP price index. The ADP non-farm is important, but what Jeremy Powell is going to look is really the GDP data. And I am very sure that the market will be aggressive if the data does not show what many of the traders expected. Then we're going to Thursday, which is a massive macro day. Chinese manufacturing and non-manufacturing PMI will be in the very morning time. And then the European Union is going to publish the core CPI and the CPI flash estimate. Again, this week, or at least the beginning of the week, looks like a sad finish for August for the European Union. But then at the afternoon, we're going to get core PCE price index and unemployment claims as every single week. But again, the core PCE price index is the data, what the Fed is really looking at. And if we don't see any improvement, the chances for raising rates in September is tremendously increasing. And then we are closing the week, but we're starting September. the first day, the first Friday on September, which is always a bloodbath because of the non-farm payroll data. There are more very important data coming up, such as final manufacturing PMI from the European Union or the United Kingdom, but we're going to detail that on the Pro server. What's the most important is the Canadian GDP, and then average hourly earnings, non-farm employment change, and unemployment rate from the United States. I have a bad feeling that these data will indeed explode the market, especially after last week. But we are not finished just yet, because also final manufacturing PMI and ISM manufacturing PMI are going to come. We already got these data from the European Union, so it will be very interesting to see how the United States responds to the European economy. But the story still not ends, because ISM manufacturing prices, construction spending, and world's total vehicle sales, which is very important for the EV sector now, especially for predictions to the third quarter revenue. It is a very exciting week, and this week could be a response for the message what Jeremy Powell sent us. But that wasn't the only one problem on the market, because as we experienced, Nvidia reported a record revenue, and I'll be honest with you, I wasn't really happy with that. So because I wasn't really happy with that, let me share with you the morning briefing what I posted to my Pro members on the Discord server. So first of all, I started the morning briefing with the SPY analysis. And as I wrote, the price closed with a 1.39% fall, the biggest fall since March 2023 in a single day. The candle itself is a massive bearish engulfing candle, rejected by the scale EMAs, which they are my own indicators, as the last protection of the bears on the upside. As the price retargeted the zone between 431.72 and 436.23, the potential head and shoulders pattern is almost complete. The neckline of the pattern is actually within the zone, and because a support line is higher on the priority list, the confirmed breakthrough on any time frame is supposed to be watched at the lower support of the zone, which is 436.23. Currently, I see accelerated momentum to the downside, and the space between 436.23 and 421.28 is clear from resistances. I assume yesterday's sell-off could be coming from the zero-day options contract, which means the market should see a balanced movement to the downside in order to continue buying these contracts. Proving this idea, I attached a list of yesterday's put contracts. It wasn't hard to find them because they had the largest options volume in the day, proved by the Wix Rocket either. I believe it could be hard to break the zone below the price, but let me remind you, Jeremy Powell speaks today, which could deliver a negative tone to the stock market if he expresses his perspective about how long high rates will be with us, means how long rate cuts will not happen in the US. And obviously, he did so. Other factors like DXY is not positive to the stock market either, as the currency broke out of the trend reversal flag to the upside as expected, and this is further weakening the stocks. The bond market is calm right now, but in the middle of some bullish momentum. So that was the morning briefing from the SPY, and here is the big gun, Nasdaq and the Nvidia report. So I was starting with a reminder for my Discord members that I had a pre-report on the Nvidia on the evening when they reported, but I haven't got the full information, the full report, so I had a little bit more information. Therefore, I continued. So the revenue was the fuel on the post-market, which exploded the price of the Nvidia at the night of the earnings report. They were all traders and investors wanted to hear a good report from Nvidia. They were who wanted to buy Nvidia, and they were the ones who did not go through on any trade on the market training or subscription. Because if they did, they would have learned that shooting before thinking is a dangerous game, most of the time resulting in losses. And we learned it. Those who had the knowledge and experience started to investigate the report. And I know I'm a bit slower on this, but not everybody has a whole trading school, as I have many things to do. So I did my investigation too, and the result is saying a few things. First of all, Nvidia had a correct report. I mean, if you can call it correct, if they wrote every unsold order to the revenue. Because as I earlier mentioned to my Discord members, I found the gap between the revenue and the paid chips. So I went forward and investigated the companies that were supposed to place the order towards Nvidia for the magic chip. I did not find 69% of the orders, meaning Nvidia reported the revenue from unknown sources, but the company supposed to order did not order or did not pay for the chips. I was wondering why this could happen. The fact that other companies are struggling for the credit conditions is one reason, but it turns out that Nvidia did not even manufacture those chips yet, meaning they did not deliver. And here is the problem. Those chips are made by the Taiwan Semiconductor Manufacturing Ltd, and as I reported earlier in one of my earlier investigation on the company did not report as much manufacturing as Nvidia need right now. This all means that Nvidia is having some sort of agreement with several companies that they will deliver those chips at some point, but did not manufacture 69% of them. As long as the chips are not manufactured, the price will not be paid, but because of the agreement, they are allowed to be calculated as revenue. Once you realize that something is fishy, you start thinking. And this is what the clever trader and investor did yesterday. Some clever investors just simply started to sell because they knew what was coming. So what came is a backfire of zero-day options contracts, because the day before, many so-called quick shooter bought these contracts in call options as they believed that Nvidia would fly to heaven. But here is the selling pressure from the investors because of the fakeness of the revenue report. So as soon as the market opened the next morning, large fishes started to buy zero-day put contracts and shorted the price down. Shorting was easy because the contract will buy the asset only when they expire, so there was no real buying power. As a result, the buyers were too quick to react. Therefore, all of the contracts went in the bin. But because of the high premium price, brokers were in large profit anyway, so it made sense to allow the put contract being activated. At the end of the day, the clever won. Not because of bears, not because of negative perspective of the market, but because this market priced in all positivity for almost the next 50 years, meaning it can no longer handle the bulls. You don't have to be bearish on this market. You only have to be clever and be here for money, not for belief. So because by now all other stocks are struggling with having no real buyer investor on the market, Nvidia was the only stock holding the Nasdaq at one place. And as soon as the above described happened, the last straw cracked. This is why Nasdaq fell 3.4% yesterday, the largest fall since a year. Big time. When the yellow support line broke, we knew something was about to happen. When it came back above, we knew something was fishy. We had to be careful, and we were right. The next level is just too close right now at 14,595.55, so I consider the situation as a high risk, but all momentum pointing to the downside. So in case the level is breaking, 13,902.92 would be the next resistance to the downside, with no additional barrier whatsoever between the two levels. So that was my investigation about Nvidia and the Nasdaq. And as you can see currently, this is a very exciting time in terms of Nasdaq. Just one more little support what we need to break, and we're opening the door towards the 200 daily moving average, exponential moving average, and that's a big gap for short positions. So it's worth thinking about that. And at the same time, it's really worth measuring what part of the market reacting right now for these newses. Because I believe the retail still don't believe that the market could actually going to the downside, but this head and shoulders, not only on Nasdaq, but on SPY as well, shows us that the retail is about to losing its power, and if the big fish answers with those candles, this could be a really, really big problem. So I don't wish you a good luck on the market, but I wish that you can learn all necessary rules on the market and how to use it. If you want to know a little bit more about it, just visit our website and visit the Pro membership. And what I can promise you that I'll be there and I'll help you to understand the market. If you like the video, give us a thumbs up, and I'll be back in the next week with another video. And maybe in the future, if more of you are going to subscribe to the channel, I can give some more content. See you in the next video.